Types of orders on the Forex market. There are two main classes of orders on the Forex market, and these are market orders and pending orders. And there are two categories in the pending orders. These are stop orders and limit orders. And we'll have a look at all of them right now. So market orders. You're already familiar with these orders. These are the buy order and the sell order. Stop orders. So the first type of stop order that I'd like to introduce you to is the buy stop. So basically, the buy stop is a pending type of order. What that means is that when you set buy stop, you're not actually entering the market. You're setting a condition or a trigger or a future order. So you're saying, if something were to happen, then I want my terminal to enter the market automatically for me. So basically what this, in this case, what's happening is you're saying that if the price reaches this green line, I want to enter the market with a buy order. So let's see how that happens. The price crosses the green line, and that's exactly when your buy stop order turns into a buy order. So from that red cross onwards, your buy stop order no longer exists. Now you have a buy order in the market. Sell stop order, very similar. So you're saying when the price crosses the green line, I want to enter the market with a sell order. See, when that happens, your sell stop order turns into a sell order instantly. So what's the benefit of these buy stop and sell stop orders? Well, it's basically kind of saving you the effort of actually waiting for the price to get to that level and then entering the market. So if you think that once the price crosses a certain price level or support line, you think the price will keep going downwards, that's when you would want to set a sell stop order and catch that movement as soon as it starts, rather than having to sit around and wait for it to happen. The other thing is that if that doesn't happen, if the price, for example, in this image that we have in front of us, if the price were to keep going upwards, then you would never enter the market at a sell with a sell order, because the price wouldn't have crossed this green line and wouldn't have triggered the sell order. So it's kind of a very convenient way to save your time and also check for specific conditions that you're looking for. Limit orders. Limit orders are similar to stop orders, but they may be a little bit more complicated to remember how they work. But we'll get the hang of it. So a buy limit order is actually set below the market. So what you're anticipating is for the market to go down, touch your order, cross it, touch it, and then go back up. So you're kind of anticipating a recoil. You think that yes, the market will go up, but first it will go down. And instead of entering right away, so you could have entered back here with a buy order, you want to get the most of this movement. So you want to actually let the market go down a bit, then enter with a buy order, and then you'll get this whole movement rather than getting only half of it. Once the red cross happens over here, your buy limit is no longer a buy limit order. It transforms automatically into a buy order, and you enter the market. That's the point when you enter the market, when the transaction occurs, the opening of the order. Sell limit. It's a very similar concept. You are anticipating an upward movement before a downward movement. So you think that the price will go up, it'll touch your sell limit order, trigger it, and then go down. Once again, you would do this if you're anticipating an overall downward trend, but you think there will first be some sort of retracement upwards. And instead of entering the market back over here with a sell order, you want to get the full movement, so you let the market go up first, touch your sell limit order, and then go down. So in this case, even if the market price crosses your sell limit order, it will still be triggered as a sell order. So there's always these risks that the market will trigger your sell limit order, turn it into a sell order, and then keep going upwards. That can also happen, and your sell limit order will be triggered and you will be in the market. And that's why you should still use stop loss and take profits with your limit and stop order. So even with a sell limit order, for example, you can tell it to set a stop loss and take profit. Of course, the stop loss would have to be above, take profit would have to be below, and it works exactly the same way. Because remember, once the order is triggered, it will either turn into a buy order or a sell order, and all the same rules apply as before. So with your pending orders, you can also set stop loss and take profit levels, which will be triggered with the order, meaning that as soon as the order turns into a buy or sell order, the take profit and stop loss levels will be activated, and they will be protecting your order as they would with any other market order. And to sum up, we've got our different order classes, different order types, and anticipated market movements. So the first two are the market orders. They're the buy and the sell. For buy, we would enter into a buy when we anticipate an upward movement, into a sell when we anticipate a downward trend. And then for pending orders, we would open a buy stop order when we think the market will go up, and then it will continue going up. So we kind of want to check this condition that the market will cross some sort of resistance line, and if that happens, then only we want our buy stop order to become a buy order. Sell stop, similar, we expect the market to go down and then keep going down. Buy limit, we expect the market to go down first a little bit and then go up. And sell limit, we expect the market to go up and then go down. So that's the summary for order types. Don't forget to leave a review for this course if you haven't yet. I would really appreciate that. And I look forward to seeing you in the next tutorial. Until then, happy trading.